Hello, 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 everyone. Happy holiday week between Christmas and New Year's. How is everyone doing this morning? Good morning, Patrick. Good morning, Stafford. Good morning, Options 22. Good morning, Dave. Good morning, George. Good morning, Connor. Hey, Chris. Well, we'll see if we get the Santa's rally or we get the Santa chop chop. Not easy getting the first comment. Patrick plays to win. Patrick does. You know what? Coming in second to Patrick, though, is still impressive. Patrick, generally the first in. I don't know how he times it so well. I just noticed your subscriptions only by luck, seeing a small bubble to sign up when I was looking at your live sessions. You should promote this in other areas of your page. Okay, thank you for that information. Options 22. Good morning, Anissa. Good morning, Ted. Good morning, team. When did this? That's just for people who want to subscribe and stay part of. I think you're talking about the YouTube ones. That I don't know. I announced that back in, when was it? November? And I do release some videos, occasionally extra videos for subscribers. Good morning, Jacob. Oh, Godo morning. That's the way I feel today. Godo morning. All right. And it was more. Oh, wow. You need some more coffee, Jacob. I even read it wrong. Boy, that says a lot about me. Can't even pick up the mistypings. Okay. Hopefully the markets will be better today. Let's see. We had some numbers coming out at 7:30. Retail inventories not as bad, or a little worse than forecast, not as bad as previous with the decline. Wholesale inventories ticking up a little more than forecast. 0.3 forecast, 0.1. So wholesale inventories climbing again. You had the home Case-Shiller home price year over year forecast 9.1, actual coming in at 8.6, and the dropping forecast minus 1.2, only dropping 0.8. Minor stuff there. The key thing I'm watching in about an hour and 20 minutes is a Dallas Fed Manufacturing Index to see how much that is still in contraction. And then there is nothing else today. So that makes it easy. The web page was reloaded due to there. That just sums it up. Pretty quiet trading today. We did gap up in the futures and then reversed overnight. Tesla taking it in the shorts again. The China registration numbers going through Christmas Day were very weak, less than 9,000, and more rumors of Shanghai slowdown and longer closure, stuff like that. So Tesla trading lower continues. What's going to hit the next major target sooner rather than later? We will see today. So far, basic materials and energy. Industrials up the most. Also, we had oil up with the, let's just scrap all the COVID measures in China and go full reopening. So we're going to see how that goes. Let's see. Fed for Feb first. We're still a ways off, over a month away, but 70 or 60, this is dropping. This is technically climbing. The 50 basis point is climbing slightly higher, but still favors that 25 basis point, and we're still in fear mode. So what does that mean today? Also, slight negative gamma. Here's what I'm really paying attention to. The gamma flip is 3,900. It's also where a minor gamma wall is. So that's the key level I'm paying attention to, because anything above there goes into positive gamma, which dealers are forced to sell into the rallies. Do keep that in mind. I'm expecting this gap to probably fill from last night. We had the little gap up in the futures, running off to the races. We're nearly to the gap fill, so I'm going to watch for that. And then we have the single candle clear path up on the shorter time frame. There was no real double in here or a major reversal pattern. You can see stalling out just in front of the 87.5. After the gap fill, Let's see. We could be in for a slightly choppier day, but this is where it's going to be a quieter trading week. My key support is about 38.61. And then my target on any rallies will be the breakdown zone. Let me just lower this real quick. The overnight breakdown zone, roughly about 38.90 to 3900. Look at that top at 3900 that came in. 1, 2, 3 top areas right at that 3900. Remember, there's a gamma wall, and the 87.5 is at 3903. So for quieter trading, I'm going to be watching the overhead resistance from Friday, pre-Christmas, before it will rally into the afternoon as key support. After the gap fill, remember the gap fill is technically on the futures down to 38.6825. On a rally, watching up to the overhead resistance and then that 3900 to 3903. NASDAQ on a 4-hour basis did trigger the double, pulling back with the gap fill. The NASDAQ already did fill the gap. Is this anywhere near a stop level for the 4-hour trigger? Because it does not raise the stop just yet. The stop level is down at 10.972.75. And the walk away is 10.938.75. That would be a trade through on a shorter term basis. On a 4-hour closing basis, 10.972. So we got the gap fill magnet that's been done. So we're going to have to see. This is pretty weak off the NASDAQ. And remember, going against the daily rotation zone. So this double was slightly lower probability, but it's not over yet. It is not over yet. We did get the nice full gap fill. So I am focusing my key area 11.104, then 11.180, then still 11.258, and on a pullback level, key is 11,006, so 11,000 to 11,006, and the major line in the sand is 10,972. Let's see. When the rally? Well, if there is a rally, we'll see. The only bullish pattern that's been triggered so far was that little mini 4-hour double. Dow still not triggering the full gap fill yet. So that's what I'm paying attention to. That full gap fill would be to 33,352. Let me run this up to about 33,400. That's the pullback area that I'm watching. The Dow actually completed after closing above the 62.5. Did complete to the 87.5. So I am flipping these around and did not trigger the double. Did not trigger the double. Major support zone for the Dow is 33,150, 33,034. Major resistance area is back to this 33.6. The double trigger is still 33,663. So those are all the levels I'm using in there. And real quick, the Russell, which also, come on Russell, did not trigger. Coming back up to the 87.5 and rotating back down. So that's where we sit with there. The only thing I'm really watching on the Russell, but this is, I would go to the Dow first on any bullish area. The Dow first for any bullish play should any doubles trigger. That's my first go-to thing because of the strength of the Dow recently. But major Russell 1760 to about 1752. Let's get to the spiders, the Qs. Spiders pretty much trading flat. 382.92, pre-market 382.92. So trading at the closing price on Friday. This is a little easier because I will use these harmonics in here. Let me get down a little in time frame. We're trading right against the key resistance, but up in here, this is where I'll use 384.25 and then The breakdown area, I'm going a little conservative, 385, and then I'd use the gap fill about 386.24 based off this price action. So that's the key levels to the upside. To the downside, support 381, and then about major support coming in about 379.25 to 379.50. It's my major support area. But no other key pattern just triggered. The thing is, if we do get the rally with this trading flat, if we do get a bounce in the open, I will be focusing on the gap fill with the spiders. If we get some strong tick. The Qs, on the other hand, not focusing on this one first with any rally. Why? Because it's trading below Friday's close. So the first thing would be the little gap fill to Friday's close, 267.65, then 268.50, and then we have this gap open bar of 270.39. Those are my key upside targets. And then, of course, after we got above that 270.39 would be the gap fill play. But the NASDAQ much weaker, and as seen with the futures triggering that 4-hour double and no follow through yet. Pullback levels about 265.50 to about 265.55, and then we start breaking below that. I'd be watching for a retest of Thursday's lows and Friday's lows areas, coming in about 263.50 to 262.50. The NASDAQ just not performing well just yet. And on any rally, remember, there's no potential double pattern in the Qs or anything, so it would just be a rally up to the rotation zone. Peeking in on some other things, looking at the DAX, nothing here, no great pattern setups. So I'm just watching the key resistance about 14,200. Key support 13,900. Other than that, there's no great setup. Notes, as I said, watching for that pullback to 112.03, definitely on the way. So the yields are rising back on the 10-year again. I'm watching for to see how it reacts. First level is this 50% retracement of the up move from the lows at the end of October 21st to the highs in mid-December. This is the major pullback area, and I'm really focused on this 50% level to see how we get a bounce there. Dollar index. This is getting really, really sloppy. I'm going to leave it on here for now. Again, 104.53 is the trigger point, but this is going to get very extended and nearly come off the radar soon because of the length of this right-hand side. All right, so if that does not trigger, we could still get a breakout, but the targets, they're not really going to matter. I would just be targeting a return to the 200. The VIX, did anybody see anything about pit trading being closed at the SIBO due to a pipe burst? I thought I saw something there earlier. So we're going to have to keep an eye on that, but the VIX might just be today from a pit perspective. Not much going on there, though. Crude, little spike up, hitting that 50. The double is off the table. There's not a fantastic setup right now in crude, so I'm just sitting on hands. Cycles are at the top on the daily. So actually now I'm focused on a pullback move, but about 77.50 is the key support. Let's just see. Natty gas, which we looked at yesterday, still not much going on. Have to see if that breaks down. Let me take a look at Tesla real quick. Tesla, 116.63. 112.83 is the next harmonic, and the first target from that massive topping pattern is 107.86. We're actually below 121, 119, which the next targets are done. So wow. I mean, let me just take off these other ones. I don't have, with this kind of price action, the only next key target is 112.83. 112.83, so we shall see with that. Then, remember the massive double target or the massive head and shoulders target at 107.30. Maybe hitting that before the end of the year, though. What's wrong with Tesla? Horrible information out of China with their registrations and the shutdown of the Shanghai plant. Now, the bulls are claiming it's just for annual maintenance, which has normally not been the case. And then they could be extended. So that's all just news stuff. But the registration, which is cold hard fact, came in on weekly registrations below 9K, which is not bullish for Tesla, especially with their China market is slowing down. So that's what's happening. So good morning, Dr. M. Elon shared he's okay with negative or flat margins. Elon, I don't have a comment with Elon. If he takes negative or flat margins, he's going to be in for a world of hurt. There's something going on, though, behind the scenes. Something's really odd. Something's really bugging me about this price action in Tesla. Not from, long term, I'm very bearish, but this price action and just being walked down, it's almost like he wants lower prices now. So I don't know what's going on. All right, thanks for that, Sterling, confirming that. I thought I saw something that pit trading. Now that's more minor, but it's just interesting. And the VIX has been a little wonky anyways. He's going to get low margins and no growth. That's going to be a double whammy. If you want not sustained growth and no margins, well, that's going to be hurting for a capital-intensive business. MO looks like it's going to be filling the latest gap. I have not looked at MO this morning. It does look like it's going to be filling. It looks like also a rotation. This could be interesting. This is something to keep an eye on. A rotation into more safety plays. Remember, this triggered a long-term double bottom. So, I don't know how to analyze that. The king is dead. Long live the king. So, with that, so far, little choppy. Let's get back to the S&P. Let's take a look. Quick thing I'm just focusing on, see if we get that gap fill. Remember, by the way, with the 730 numbers that came out with wholesale inventories climbing, that was this little bar right here. This was triggered by those 730 numbers. Keep in mind, if it does pop in the open, you have a clear path move in the breakdown zone is 38.83. So you could get a quick little return. If we get any bullish tick on the opening, you could get a quick little return to the short-term breakdown zone, 38.83, because of those 730 numbers. But I'd rather have that trigger after the potential gap fill. With that, don't get chopped up this week. It's going to be thinner markets. The only bullish pattern I have that's triggered is in that NASDAQ, and it, after triggering, got very, very weak. And that's not a major bullish pattern. Remember, just to reiterate, that's very minor going against the daily rotation zone, and that wouldn't even take out the highs from Thursday or Wednesday. So, other than that, there is nothing sustained bullish yet. Everything would be off of short-term trading. None of the other patterns have triggered. I want to reiterate that again. A Santa rally is not guaranteed. And remember, technically, from our opening price last night, if it closes up this week, it's considered a Santa rally. So key off this the price for the S&P is 38.7750. If it were to close at 38.78, it's technically a Santa rally. Was it a strong one? No. All right, I will leave it as that. At that. I will see everyone after the close today. Hopefully Bob will be on. So tune in for that. Regular time, 3:30 Central. Bye.